How's it going, crypto community? This is Jade, the XRP Martian, back with another Martian report. In this one, we're going to be going over Ripple's Q2 market report. So, awesome review of what's happened in the last 3 months in regards to blockchain and Ripple. They do include things outside of XRP and Ripple, but I'm going to focus mainly on the Ripple points, aside from things that I do feel are actually going to impact us as XRP investors. So, going into the report, we're going to start off talking about their sales. So, sales in Q2 accumulated to $251 million worth of XRP, and given the reports of inflated volumes, which Ripple took seriously, the company temporarily paused programmatic sales and placed limits on institutional sales to evaluate the problem in early Q2. Ripple later resumed XRP sales at a rate of 50% lower versus their previous guidance, which was 10% or 10 basis points of CoinMarketCap's reported volume. For those of you who don't know what a basis point is, that 10 basis points would be 0.1%. So they reduced their sales from being 0.1% of the daily volume to, or the volume, whatever time frame they sell on, to being 0.05% of the reported volume. So they do seem to be using CoinMarketCap for their volume metrics, though. So apparently they feel that CoinMarketCap does at least accurately represent the volume that is effectively on the Ripple ledger, right? That is effectively taking place across XRP ledger. Not Ripple ledger, XRP ledger. My bad. At any rate, jumping down, we're going to hop into the differences between the different sales groups. So institutional versus programmatic. So institutional sales, Ripple's long-term view is that efficient liquid XRP market should resemble the traditional foreign exchange markets, given XRP's use case as a global value transfer. So they did a lot of over-the-counter exchange in 2017. This is something that a lot of people in the community complain about, that Ripple's selling XRP over-the-counter and that is suppressing value. Well, XRP listing, they did this for a little bit of background. They decided to do this because they just didn't have liquidity, in the exchanges, so it was just easier to sell over the counter to these individuals. Now, XRP listings have increased as Ripple has partnered with the top digital asset brokers and used inventory to serve as backstops for XRP liquidity, which has allowed these over-the-counter liquidity providers the ability to source XRP, even when institutional quantities of XRP were difficult to access across exchanges. So Ripple decided to pull back from providing XRP over the counter at scale towards the end of Q2, in light of the over-the-counter desk's ability to source institutional demand for XRP in the open markets. Going forward, Ripple plans to focus institutional sales on markets where the on-exchange liquidity of XRP is insufficient to meet institutional demand. So to consolidate what all that is saying is essentially that Ripple was originally selling over the counter, and they, to some degree at least, are still, but now they are targeting their sales strategically to exchanges, the open market, where there is not enough XRP liquidity for institutions to actually engage with that exchange. So this is awesome, because this is actually really bullish for price, because this means that we are going to actually start seeing an impact on price based upon institutional adoption of Ripple and XRP. So this might be part of that whole great rollout plan that we were supposed to see for the second half of 2019 that was hyped up all of 2018 from Ripple, right? And this is actually something that fueled a lot of speculation that we were supposed to see a relatively strong price increase in Q3 and 4 of 2019, which, just for everyone's reference, July is only the first month of Q3. And so keep in mind that this is only the beginning of what has been Ripple's large rollout plan for the second half of 2019, as we heard them again state multiple times that they had such a plan. So very interesting that Q2 was them essentially transitioning towards this, and hopefully we will hear from Q3 that they have decided to go even further this direction, right? So that we can actually start seeing institutional volumes represented on exchanges, and thus having a real world impact on the price. Now, this is not contained here, but I have the suspicion that another reason why Ripple is slowing their how much XRP they want to be releasing is because they need to maintain a large supply of this XRP, which they can surrender, which they will, if successful in their attempts to get XRP adopted as a global reserve of sorts, a large portion of that would need to be allocated to central monetary authorities such as the IMF, so that they can, using appropriate fiscal policy, ensure that the price does not go wild in any one direction in the long term, not just the short term, right? Obviously, in the short term, price is going to be volatile because it's a nascent market. But the idea is that if Ripple's end game is effective, then a large portion of what they have will need to be surrendered over to central monetary authorities so that they can essentially protect the global market as a whole from volatility in this asset, in this new transfer of value system that is the distributed ledger XRP, right? So, going over this obviously moves into the escrow, which, when you talk about sales, that's obviously what you're talking about is the sales from escrow. And what we have now statistically is, or figuratively from them, is that we now know that they actually sold roughly one third of the XRP that they took out of escrow. So of the 3 billion that they took out, they removed 900 million, which was moved towards initiatives such as Spring, or invested in things like Spring initiatives, or also RippleNet partners such as MoneyGram, which is also really cool to see that we seem to be at this point where they have now reached such a demand where essentially on average Q3 each month they were dealing out 33% of their escrow, which that's a rather large portion, I believe, compared to previous months, but I think they talk about that later here, so we'll go off their figures. I don't want to throw anything at you that wasn't here. So the volatility and correlation report indicates that XRP's volatility on daily returns over the quarter was 5%. So on any given day, you could have made 5% of more money if you were, the master trader, right? But that, margin trading, or in this, you probably could have got maybe like a 2% daily return. Not too bad. At any rate, what it also indicates is that XRP's correlation to Bitcoin has dropped from Q1, which was already lower than Q4 2018. And also, it seems to be remaining highly correlated to Ether, which is interesting. I did not know that, actually. But moving on to RippleNet, we find out that Q2 saw the highest number of customer transactions on RippleNet In fact, the number of XRapid transactions increased 170% from Q1 to Q2. That's almost a 4x. Pretty awesome. Ripple has seen 30% increase in live partners in Q2. So what this indicates then is that there was now either they had a large the partners who are going live on XRapid right now are larger, significantly so, than the individuals who are live that went live in Q1 or were live prior to Q1, or that those partners who were live prior to Q1 have brought more corridors online as new partners have entered the XRapid ecosystem. That's more so what I personally believe is happening, and that goes into the snowball effect, right? That the more partners come on, the faster that this is all going to snowball. But it just starts slow. But we're at 4x in over 1 quarter, so remain hopeful that this trend continues, because you can only do that so many more times before things just get silly. Volumes, and that's what we're talking about here is volumes, right? The volume will start to get really silly if this trend continues for any kind of extended period, multiple quarters in a row, so to say. Now, gotta keep going here because I'm not gonna try and talk too much outside of what's on here, because this is a fairly long report and we're at 12 minutes. So notably in Q2, Ripple announced it agreed to enter into a strategic partnership with MoneyGram, which, as we all know, is one of the world's largest money transfers, and their intention through this partnership is to the partnership will last for an initial term of 2 years, and the hope is that Ripple will be able to help MoneyGram as a key partner for their cross-border payments and foreign transaction settlements, which will be using digital assets. And obviously, this is the hope that it will benefit both companies immensely. It's going to help provide XRP liquidity, which it desperately needs, and it's going to help save MoneyGram hopefully a massive amount of money, which will make it a profitable business, which it was not prior. It's not currently, or I don't know if it is currently, but it was not prior to Ripple's massive investment in it, which may have alone made the business at least profitable for this year, right? Who knows? That's just speculation. I don't know. I don't know the actual balance sheets for them right now. So, at any rate, moving on to Xspring, we get just a brief overview talking about that companies and developers are continuing to build on the XRP ledger and utilize the ILP and XRP to significant developments from companies and projects which Xspring supports include Bolt Labs, Agoric, and Robo Ventures. So Agoric is just simply a smart contracts platform. Bolt is an escrow. It enables enables payment channels that hold funds in escrow. So it's an escrow service. And then Robot Ventures is a pre-seed investor in fintech, and one of the programs that they have things that they have invested in is Kava and Blockfolio, two of the most prominent right here. But also you have CoinMine, Point, Centrifuge, Elementus, Ampleforth, Compound, Rain, and Namebase. I'm not familiar with any of the others outside of Blockfolio and Kava, but interesting nonetheless to obviously follow those money trails for anybody out there interested in doing your own research. Here's a rabbit hole for you to go dig down, see if you can find me something of interest, and I will cover it. In the meantime, let's jump back in here and talk about the regulatory activity we saw in Q2. So the SEC and UK's Financial Conduct Authority both gave clarity, some degree of clarity in regards to XRP. So the SEC announced that it will be establishing nodes on certain open source permissionless ledgers, such as XRP Ledger, to help inform its policy making. And the UK Financial Conduct Authority analogized XRP to Ethereum, which it recognizes as a hybrid utility exchange token and not a security token. Important, because there are so many people out there that are still trying to say, after all this time, that XRP is a security. It boggles the mind. But, ladies and gentlemen, if you are not familiar, XRP is not a security. It is very much so, it's a currency. It now is not being identified as such still because of its hybrid nature, so it's called a digital asset. But essentially, it is a currency, an international currency. Now, moving on to the discussions of companies and technology companies that are entering the space. So, new entrants into the ecosystem brought global awareness around cryptocurrency and blockchain, obviously most notably being Facebook's announcement of their Libra white paper, which brought a lot of mainstream attention. But we also got announcements from Amazon, Yahoo Japan, Google, and Samsung. Amazon was granted a patent to build a proof-of-work cryptographic system to fight DDoS attacks. Also, Amazon Web Service launched its managed blockchain service, which supports open source framework on Hyperledger Fabric for its enterprise clients. Now, if you don't know why I got excited about Hyperledger Fabric, well, that's because Hyperledger is built on top of what? The ILP. The ILP utilizes what? XRP. Heck yeah, baby. You just gotta follow the path sometimes, right? So good stuff there. Amazon partnership confirmed, Ripple? No. But you know what? You're working with somebody who you're working with, or you're working with somebody who works with somebody who you work with, so that's good enough for me for now. Yahoo Japan went live with Taotao, which is a cryptocurrency exchange where Bitcoin and Ethereum will be initially traded, and margin trading for XRP and Litecoin will be available. Google announced the Ethereum app builder can use Google software, which will be able to integrate data from sources outside of blockchain through partnership with Chainlink. And that's why Chainlink blew up in Q2. So Samsung also announced that they are going to be developing their own Ethereum-based blockchain and may even issue their own token. Moving on, increased institutional interest. Digital assets experienced increased levels of institutional interest over the past 3 months. Last quarter, futures trading and other crypto derivatives were widely discussed as the market capitalization of digital assets increased. CME reached a record high for Bitcoin futures, and Bakkt announced plans to begin testing its futures contracts. Awesome stuff, right? We got Bakkt, we got increased volumes because price has been going crazy for Bitcoin and kind of XRP. We doubled, but now we're back. But Bitcoin's crashing too. You have your ups and your downs, whatever. What can you do? Markets are volatile. We're in a nascent market, and that's why if you're not a seasoned trader, you should probably be not financial advice, but I strongly suggest you learn to detach your emotions from your investment and realize that it could take a while before you see consistent upward trends in this market. They are coming, but nobody knows when. At any rate, back on point here. Banks are continuing to bet on crypto and blockchain. So established banks continue to show interest in blockchain and crypto as they build their own private blockchain solutions and tokens. Last quarter, a group of 14 financial firms led by UBS, including Barclays, Santander, and Canadian Imperial Bank of Commerce, created Finality International, and their intention is to develop and launch a utility settlement coin to improve cross-border payments. Now it says payments, not settlements, so hopefully that they actually meant payments and not settlements, and hopefully it's only for payments, but the coin does say settlement in it, so I don't know. That might be an interesting competitor to us whenever it releases, if it ever releases in time to be a competitor, right? At any rate, crypto exchanges reported record trading volume and profit, and traditional brokerage firms plan to offer cryptocurrency trading to their institutional clients. So that will be so exciting when we finally can see some institutional clients begin investing in this space. Outside of the over-the-counter exchanges, right? That's what we really want to see, is actual open market exchanges experiencing institutional inflows, so that we can see demand begin to outstrip the supply. Because when you have over-the-counter, obviously the supply is not it's not actually being impacted in a visible way to the market because of the over-the-counter nature, right? I think that's technically the right way to say that. At any rate, moving on, there were also multiple additional regulatory highlights to point out. Most notably, the G20 officially announced its support for the FATF's crypto guidelines and ongoing work by the Financial Stability Board to explore the implications of decentralized fintech and how regulators can better engage stakeholders. The SEC Commissioner Hester Peirce said current guidelines fall short of clarity that the industry needs to move forward to develop additional guidelines regarding crypto. France pushed for the EU to adopt a cryptocurrency framework to achieve uniform laws, which is critical not only in the EU but globally. So, essentially Hester Peirce and France are both pushing for the same thing, because we need coherence in the global regulatory ecosystem for these new global systems, right? And also, the UK's Financial Conduct Authority is consulting a potential ban on the sale of crypto derivatives to retail investors. Out of the Asian region, we have the Bank of India considering a law that mandates payment data should not be allowed to leave its borders, and announced the framework for its fintech sandbox that invites blockchain projects to take part but excludes cryptocurrency-related businesses. So essentially, India is like, yeah, we don't have a problem with enabling institutions and corporations and banks to benefit from these systems, but regular people, no. You're not bringing a business model in here, right? You're going to engage as a financial player only. So interesting, nonetheless, how this seems to be how India is. They seem like, it really seems like India is just like 6 months to a year behind the rest of the world in regards to how they're treating crypto. It's very bizarre. But at any rate, Japan's at least progressive, right? So Japan's House of Representatives passed new crypto regulations in the upper house of the National Diet. Japan's bicameral legislator? I don't know what that word means. Yeah, never seen that before. But I'm assuming that's like, maybe they're, I don't know. At any rate, their House of Representatives passed this new regulation with the intent to strengthen local regulations and cryptocurrency practices. In South America, Brazil established a new commission to consider crypto regulations in the country, while Chilean government introduced a bill on cryptocurrencies for their Congress. In the Middle East, we have Egypt lifting its ban and allowing licensed cryptocurrency companies to participate in their marketplace, while Pakistan's central bank announced that it intends to launch a digital currency by 2025. So, in conclusion, this video is up to 24 minutes, so sorry that it's taking so long to get through this, but, good overview of the last 3 months. So, in conclusion, Q2 was marked by increased regulatory activity, landmark partnerships, and high-profile announcements from new entrants and key industry players. These activities underscore the continued maturation of the blockchain and crypto markets. In addition, Ripple has taken proactive steps to address the issues of inflated volumes by reducing future XRP sales and changing its volume benchmark. Awesome, awesome stuff. We see an increase in demand and a reduction of new supply into the trading, moving liquid markets. Well, what happens when you have reduced supply and increased demand? I don't know, ladies and gentlemen. I mean, I do know, but that's for you to do your own research and the price to perhaps reflect at some point in the very near future. At any rate, I've been Jade, the XRP Martian. Once again, you've been watching the Martian Report. If you're new, please, if you haven't already, hit that subscribe, ring that bell, and be sure to hit that like on your way out. Just because the fact you made it this part, that means you obviously enjoyed what I've covered for you today, even though I bumbled it up quite a bit. Nonetheless, thank you all for your constant support. As always, please leave a comment in the comment section below. I look forward to engaging with everybody in the comments as always. So thank you all once again, and I look forward to seeing all of you as always in my next video on Mars.